Economic Affairs Minister Datuk Sri Muhammad Azmin Ali will ask Khazanah Nasional to review Malaysia Airlines' deal with Boeing on the heels of the Ethiopian Airlines crash yesterday involving the Boeing 737 MAX jetliner. Malaysia Airlines doesn't have any of the planes in its fleet, but it does, however, have a firm order for 25 of the jets, the first of which is to be delivered in 2020. His statement comes as China ordered all its airlines to temporarily ground their 737 MAX 8 planes after a second fatal crash involving the model. Ethiopian Airlines, which operated Sunday's doomed flight, and Cayman Airways have suspended their use of the aircraft. Flight ET302 had crashed shortly after takeoff yesterday, killing all 157 people on board. This comes less than 6 months after the same model, operated by Indonesia's Lion Air, went down minutes after takeoff last year, killing all 189 on board. The KL Sessions Court has ruled that Trezmal Group's former chairman and ex-Transport Minister Tun Dr. Ling needs to testify in court in regard to the irregularities in the company's accounting. The court dismissed Ling's application to set aside the subpoena or summon to testify in the court, deeming the application as having no merit. Trezmal was once a stock market darling, whose investors included Robert Kwok and Post Malaysia. It saw its fall from grace in 2007, after it was revealed its stellar results were due to massive accounting irregularities. Prosecutors are still cross-examining its founder and former CEO Gan Boon Aun, who was charged by the Securities Commission in 2007 for furnishing misleading financial information. Ling is the only witness that defence wants to call. Prime Minister Tun Dr. Mahathir Mohamad says there are certain policies by Beijing that are beneficial to Malaysia. Like it or not, he says China is a big power, and it is up to Putrajaya to identify policies that are good for Malaysia and make use of them. His remarks come days after South China Morning Post published an interview which quoted him as saying, if forced to take sides in the geopolitical rivalry and trade war between China and the US, he would side with wealthy Beijing over fickle Washington. He told SCMP that Malaysia wants to benefit from China's growing wealth and that Putrajaya will decide how to handle relations with Beijing independently. On fears about Beijing's growing clout, he says while China is looking to gain as much influence as possible, it doesn't seem to want to build an empire, which means Malaysia does not have to worry about losing its sovereignty. Deputy International Trade and Industry Minister Ong Kian Meng has clarified that the third national car will not be a flying car. Ong has neither seen the prototype nor is he privy to the details of what this car would be. However, he believes it is unlikely that the flying car will be produced and sold at a commercial mass basis. He explains that whatever is being developed will be a prototype, utilizing some existing seed money. It would be the prerogative of parties in the private sector if they want to take on the project and expand it. Last month, Entrepreneur Development Minister Trezmal Muhammad Yusof said Malaysia has joined the race to develop flying cars and that a prototype developed using local technology would be unveiled this year. However, it would not be for the general public. Muhammad Trezmal had reportedly said that the target market would be transport service companies, including Grab, which he said is looking to use it as part of its fleet. UOB Kay Hian Securities Malaysia is advising shareholders of Kenju Can Factory to accept the mandatory general offer by Can One at RM3.10 per share. This was on the basis that the offer was reasonable, although deemed not fair, as the offer is at a discount to Kenju's estimated fair value per share. In a circular to Kenju shareholders, UOB Kay Hian said, based on a sum of parts valuation method, an estimated fair value for the entire equity interest in Kenju shares would total RM1.49 billion or RM3.35 per Kenju share, which means that the offer price would be a discount of 25 cents or 7.46%. However, UOB Kay Hian also points out that Kenju shares have not been traded above Ken One's offer of RM3.10 for over 2 years. It is also at a premium of between 14.81% and 51.22% over the 5-day, 1 month, 3 month, 6 month and 1 year volume-weighted average price of Kenju shares up to December 11, 2018, when the offer was first announced. And as Ken1 intends to take Kenju private, the research house says the offer is an exit opportunity for shareholders to realise their investment.